Twitter can be a horrible place. It can be a great place if used the right way as well. Jason says, so for your backtesting, do you filter out trades that occur during news events? I do not. No, I do not. If there are certain news events, like if you know something is going to, if you know you're not going to trade during something I would say it used to be a non-farms back when I was testing. In an interest rate decision, you can filter out those. I don't think it's worth it to filter out because here's the thing: you never know what events are going to be important or not at the time, right? You never know what events are going to be important or not at the time. So again, you can look back when I first started trading, non-farms every first Friday was a massive factor in the market, right? The market would blow up hundreds of pips every first Friday. The market hasn't really cared about non-farms, or maybe cared about it a couple times within the last 10 years. So depending on what the underlying market condition is, you don't know what the effect of news is going to be. So to filter out every single news event, to filter out every single, let's say, GDP announcement, you can be filtering out really news events that have no impact. We just saw unemployment claims come out at 8:30 today, where unemployment claims back, when we're coming out of the recession here, in the 2009, 2010 recession in the U.S., every Thursday, unemployment claims and any type of job number would throw the market into a crazy type of mode, right? Unemployment claims doesn't really matter at all right now. So it's tough to be overcautious like that and filter everything out. I think there's nothing wrong with being aware, especially with your scheduled news events. So unemployment's going to be every Thursday at 8:30, right? Non-farms is going to be every first Friday at 8:30, right? So there are certain events that are scheduled that always come out at the same time, and I think it's okay to be aware of that. I don't think you necessarily want to filter it out of your testing. I think you should track the valid trades that you get. Yep. On the bright side, finally out of pound dollar with targets. In the future, I might exit positions. Gold taps my stop loss and hits my target profit right away. Yep, that's the whipsaw. Jason says, so for back testing, sorry, I just read that already. Jason Grayson said the other day about once completing back testing, look back at news and see how the market reacted. I think that's the best way you can understand news. And I don't think, I guess back test, I don't think back testing, I don't think looking at historical news is the greatest way to do it, because again, unless you know the underlying market conditions, which typically most of us don't. So if I were to ask you guys what was the main thing that mattered in 2013, could you tell me? Right? Most of us don't, because we're not experts on the fundamental level. So what I would recommend doing is you look at it real time. Right? You make a habit of looking at it real time. So on a daily basis or on a weekly basis, do a weekly back test where you look at the week that was, and then you look at how the market, right? How the market reacted to the current time news events, because that's going to give you a much better idea of what matters now. Because again, what's important to understand is that what matters now didn't necessarily matter a year ago. What mattered 5 years ago doesn't necessarily matter now. Does that make sense, guys? It changes depending on the economic kind of standpoints of where we're at. So I don't know if back testing, and I'm always looking at things from a time perspective, is it worth your time? Because we all know back testing. It's a long process, right? If you're going 10 years back on every single pair or whatnot, and you're looking at every single economic news event, that's a very big time investment. And I don't know if that time investment is worth what you're going to get from it. I don't know if that time investment is worth what you're going to get from it. Unless you're picking out a handful of very specific, one news event, like an interest rate decision, for example. because obviously those aren't going to be too frequent. But at the same time, you also need to understand what else is going to be difficult is, again, do all interest rate decisions matter? What would you guys say? Are all interest rate decisions important? No. Why? Because guess what? An interest rate decision isn't important unless there's going to be a change. And how often is there a change? And at the same time, based on the conversation that we just had, right? If there's a change, if there's an expected change in an interest rate, does the actual interest rate decision matter? No, because that was priced into the market well beforehand, right? If you guys remember the conversation we had before the break about how news works. So it's tough to come to a conclusion with stuff like that. So I personally don't think it's worth it. I don't think there's a downside of doing it aside from the time investment. But I would work on a shorter time frame basis. So I would do it on a daily basis where you go back and look at today, and be like, okay, here's what's going on currently. Here's how the market reacted, blah, 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 blah. Or maybe make it like a weekly thing where over the weekend you take some time, you look at all the news events during the day or throughout the week, and then you go back and you start tracking the reactions that way. But I think that's a much more useful way to do it. Just because it's easier to know what type of market condition we're in present time than it is going back to 1996, because I have no idea what's happening in 1996. I was somewhere playing basketball or in school pretending to learn about something. So, movement in the market as expected.